Welcome back to Galaxy Grid. As always, I'm Alex Thorne, head of firm-wide research at Galaxy. I'm joined this week by Zach Picorni and Will Owens from Galaxy Research. A little bit of a lighter show today, but that's mostly because of the storm that has enveloped the entire eastern seaboard of the United States. Gentlemen, how are you faring with the snow? I think in New York for both of you.
Did a lot of shoveling, but we survived.
It's honestly awesome.
Yeah, it's your first winter in New York, I think,
Yeah,
Will.
yeah.
When it snows a lot, you can just like walk down the center of Park Avenue. There's no cars. It's pretty cool.
No, it's awesome.
Well, other parts of the country were much more devastatingly hit, including Nashville, where you were last week. You escaped right before Nashville got just absolutely slammed by an ice storm that I think is going to have power out for a long time. We'll talk about that with Will in a minute and about Bitcoin mining. But first, we're going to talk about crypto at Davos. It's been at Davos for several years, but the sort of level of maturity and the amount that the world's global elites are taking crypto serious, I think has risen this year. And Zach will give us a rundown of some of the crypto headlines from that. I'll talk about the Senate Agriculture Committee releasing its discussion draft of crypto market structure legislation. Nothing too controversial in there. Remember, that's just a little piece of it that would eventually get combined with a much bigger piece from Senate banking. But nonetheless, an interesting codification of understanding DeFi appears to be emerging across these various drafts and discussions that I'll highlight. And then, like I said, we'll go to Will Owens and have him explain to us how the Bitcoin Park's Nashville Energy and Mining Summit went last week in Nashville, and also perhaps what some of the implications of the storm are on hashrate. Before we get to any of that, I need to remind you, please refer to the link to the disclaimer in the podcast notes and note that none of the information in this podcast constitutes investment advice or an offer, recommendation, or solicitation by Galaxy or any of its affiliates or by any securities. Wow. No one can do that disclaimer like me, you guys. I got to master it in one breath, though. It's like just, I can do like 70% of it in one breath of it. All right, well, let's hop right into it. The crypto anarchists, are they now mingling with the global elite at Swiss ski resorts, Zach? I mean, is that the takeaway?
Yeah, like you said, the industry has had presence at Davos for the last at least handful of years. But I think the big difference this time is we kind of moved away from like the theoretical, like, oh, like maybe this is how it can work, or we need like thoughtful regulation is like a word that was used pretty frequently last year. So like now it's like, okay, we have genius, we have like somewhat of a path towards clarity. Like there's actually like rules and laws for this stuff, and now it seemed to be more focused on implementation and like how we slowly roll this stuff out. And like Larry Fink saying we need to tokenize everything and put it on like one, I think he said common blockchain or unified blockchain was the language he used, which was a significant difference versus what was said in years past.
What do you think he means by one common unified blockchain? Because that was a little bit of an interesting statement.
Like BlackRock tokenizes a lot of stuff on Ethereum. Like maybe he thinks we literally need to put like everything on ETH or just like a single ledger. Or maybe he just thinks like one unified internet of blockchains, like getting back to the Cosmos thesis. But yeah, kind of a vague word that I think is like kind of hard to like interpret.
Yeah, I can't imagine that he actually is advocating for one L1 to rule them all. But you're right, they do use Ethereum a lot. They don't offer any Solana products that I know of. But they also love Bitcoin. Surely he doesn't mean that Bitcoin will be carried on Ethereum and that will be the primary way. I sort of took it to mean more of sort of like a general, like, dare I say boomer way of saying like, it's all going to be interconnected, guys, on the blockchain. Like, don't stress, like not so much like I advocate for a Cosmos style internet of blockchains or Ethereum maximalism. But that, I thought that was interesting from an L1 standpoint. Surely unified blockchain is not a term he came up with on the spot. It feels like something they must have been talking about.
Yeah, I think like from our perspective, like it was a bit of a head scratcher, but I think like if you think about it more generally, he might just think we need to put everything on blockchain rails versus like one single chain.
Yeah, and the blockchains offer like, unique or unprecedented like interoperability. And that's what
maybe exactly.
Connectedness.
Brian Armstrong, has Brian Armstrong been reading Galaxy Research, Zach Picorni, Futarchy?
Yeah, Futarchy reached Davos, which like maybe the highest stage it could possibly reach. But yeah, he was talking about prediction markets and how we can start using them to essentially look beyond just probabilities of events happening and saying like, oh, like let's like start using the value of stocks to guide decision making. which is the definition of decision markets, which we've covered extensively on the desk here. But yeah, that was like a cool like little side quest that showed up at Davos.
Yeah, where have we heard that before? Oh wait, Zach has written an enormous number of reports. Hey, Brian Armstrong also answered a question from the South African central bank governor about why Bitcoin might make sense in a central bank reserve. Let's roll that clip real quick.
We would have a significant problem with a lobby that says governments should hold this asset or hold that asset without what the strategic intent of government is. Because you see, there is a history to gold. There was once a gold standard. Currencies were pegged to gold. But if we now say that, okay, Bitcoins, okay, what about platinum? What about coal? Why don't we hold strategic beef reserves or mutton reserves or apple reserves? Why Bitcoin? So it's a public policy issue that we have got to be engaged in. And I would caution against the move then that would say there is an industry with a particular interest in a particular product, and we would like to impose it on society and say society must hold this as a reserve. I would have a fundamental problem with it.
So why Bitcoin reserve and not beef reserves and mutton reserves? Anyone wants to comment on that?
Well, I think that if you like Neil Ferguson is here, he has a great book on the ascent of money, and he's a historian, and so many things have been used as money over the years. I think it's pretty, this is still maybe a new idea, but I think it's clear at this point that Bitcoin is a better form of money than gold. It is provably scarce, just like gold, but it's more portable and divisible, so you can actually use it. Has higher utility, I would say. And it was the best performing asset of the last 10 years. And so for store of value, I think it's going to be important for governments to hold this over time. It might start with being 1% of their reserves, but I think over time it'll come to be equal to or greater than gold reserves.
Okay, great. Well, let's.
So a couple funny things about that stood out to me was one, central bank governor suggesting a lot of perishable goods that they would be equivalent, like mutton and beef.
That made me laugh.
Yeah, like surely those are not actually options, right? And he said, why not gold? Well, they do hold gold. Why not platinum? They may or may not hold platinum, but there might be reasons for that. I don't know. What was your guys' reaction?
I don't know. I just did a quick Google search to see how much gold and platinum South Africa exports, and it looks like they're doing over 6 billion a year in gold, and they supply like 70% of the platinum supply to the world. So it's kind of like the biggest gold and platinum salesman is asking, why would you stop buying my gold and platinum? And like much of those arguments that he laid out is like stuff we've seen in the past. Like why wouldn't you use like Beanie Babies or whatever? Like it seems to kind of just be like rehashing of an old argument and trying to defend his moat, whatever that might look like.
Yeah, it's funny. Like both people talking have such obvious incentives.
Yeah, I was going to say the incentives thing is another point he made. He said that people who have a product they want to sell are trying to force it upon them. But like, can we just be clear? Like, I feel like and Coinbase deserves a lot of credit, in my view, over the years for selling Bitcoin. But it's not like they're primarily a Bitcoin salesperson. Even companies that only do Bitcoin is literally like global and totally accessible. It's not like a coin issued by a small group of people or anything, right? So I thought that was a little also, maybe that's a thing in the narrative space that Bitcoin still needs to sort of overcome, at least at the central bank governor level, where it really isn't something people are selling. In fact, most of us have just stopped telling our friends and family to even bother bringing it up with them. At this point, it's an idea that's going to be inevitable or not happen at all. And I feel like it's the inevitability, not the salesmanship, that is the reason it's being thought of in these types of investment vehicles like bank reserves. But I don't know. Anything else to cover here from Davos, Zach, that stood out to you?
No, I just think the big takeaway was the language they used around like it not being so much of an experiment anymore and actually starting to think about it in like implementation and like thoughtful guidance on the future. It's like the language used is very much so in the present and like how we actually get this thing done versus just speculating on how it works.
That's something I've noticed as well. In particular, this week, last week on the topic of tokenization, was at a meeting at the Securities Industry and Financial Markets Association, SIFMA, which is basically all the big banks and brokerages, really all the big securities companies, so broker dealers, funds, and asset managers, and about tokenization. And it really was not should it happen, but how will it happen? When will it happen? Right. So more a question of when than if. Also seems similar to what you're saying about Davos. All right, let's move on. Senate Agriculture, the committee that oversees the Commodity Future Trading Commission, the CFTC, has to do its own piece of this broad crypto market structure legislation because it involves the CFTC. So they released a draft of their language last week. They're supposed to have a hearing Tuesday, January 27th. It is now postponed until this Thursday, January 29th, due to the snowstorm in DC, which I'm told got about 8 inches with a layer of an inch of ice on top of it. So people are still shoveling out there. And if members of the committee can't get into Washington, then you can't hold the hearing. I would say just overall, obviously, if you're listening to this, you've heard me and the team talk a lot about the market structure stuff. This agricultural committee piece is much narrower than all the other stuff we've been talking about with the Senate banking, where I had described it as a Christmas tree and all these other things are getting hung on to it. The draft that was released last week is really about how the CFTC oversight of spot markets and crypto derivative markets would work, and not much more. And I saw some headlines. People said, "Oh, self-custody was taken out of it." Well, it wasn't taken out of it. It's just not. It doesn't need to be in it. It's pretty firmly in the Senate banking one. And if and when we ever see a broad floor vote on this legislative package, it would be the combination of these two. So it's really jurisdictional that Senate Ag has to do something here. I think one of the only takeaways I would mention is that the definition of what qualifies as decentralized in the context of DeFi, whether it's an application or an L1 or blockchain, has really, I think, now crystallized. It's about whether there are legal persons or person who can materially alter or if there's central control, right? And I know there's obviously still some wiggle room there, but both committees, it seems both parties, entities across TradFi do finally appear to be admitting, or even dare I say conceding, that there are instances when something could be too decentralized to be able to comply with a regulation of any type, and they're carving that out. We see it carved out in the Senate Ag version. We saw it carved out in the Senate Banking version, and didn't look like it was mostly going to be on the table there. It was carved out by participants at the meeting I went to at SIFMA, as it related to tokenized securities and whether DeFi that traded them should have to be exchanges. I think that's a big positive, a big step here. It does mean, I think under some of these cases, even in Clarity, the House's version, like, it's possible that DAOs that are too centralized that materially control a protocol, they might not be decentralized enough. There's, it's not a perfect, it doesn't give a lot of leeway. It's not a handout to the crypto builders of the world, but I think it represents an important distinction, which is that something that really is too decentralized to be regulated shouldn't be erroneously regulated and shouldn't be de facto illegal. And I think that's a big win over the phase of these negotiations. Not everything would meet that definition. So it is also possibly the type of thing where if we see that language enter law, kind of like Gensler blocking the ICOs leading to the simple agreements for future tokens construct, you might see this federal language push the industry to become more decentralized, which, of course, as far as incentives go, I think that would be a good one. That's all I've got on this, guys. We're going to wait and see. I would say the only other thing to see, if you're watching on Thursday, what you're watching for, this is a partisan draft that was released, meaning it wasn't directly released by both sides of the committee, both parties, but it does incorporate some compromises that they've already gotten to. So we're looking to see whether acrimony among the members across both parties seems to have spilled over from that very acrimonious Senate banking negotiations, or if we can get something slightly more bipartisan out of the Senate Ag thing, or at least if they seem to not be like at each other's throats, perhaps, if anything, that might be a sign that the bill generally has the staffs and the two sides in Congress over the last week and a half since the other SBC was delayed, maybe they've made at least a little bit of progress on, coming back together, even if it's just like on a social basis. That's really all you're looking for here. Otherwise, I think you're going to see at a minimum Republicans voted party line out of the committee. You're looking to see any hint of bipartisanship that might tell you that negotiations broadly are improving.
Yeah, the decentralization test that you're mentioning, are they just applying this to like DAOs at like the application level, or are they also looking at like L1s and all that stuff? Or is it just like totally unclear?
In Clarity, the House version, they have a very specific test. You can't have more than 20% ownership of tokens and other stuff like that, insider sales. And that was called the mature blockchain test. It's done a little bit differently in Senate banking. And yes, and there's not like if one entity controls X votes of the DAO, then it would be considered decentralized, or centralized, I should say. Yeah, it's not quite clear, I think, exactly what the bright line test is, but the conceptual test, I think, is correct. Is if it's centrally controlled, then it's not decentralized.
Yeah, there seems to be like a focus on the supply of the tokens.
Well, in Clarity, in the House version, there was. I haven't seen that in any language from the Senate yet, but and it's not just the ownership concentration, right? It's the governance control in the case of like a proof of stake or a voting system. Well, let's move on. Will Owens went to Nashville before a historic storm, which obviously I hope everyone in Nashville stays safe. It ended up being pretty bad in Nashville over the weekend because of ice pulling down trees and knocking down power lines. Other parts of the country that had been forecasted for fared a little bit better, it seemed like, but Nashville really got hit quite bad for an area that never does. Nonetheless, you were there right before the snow and ice for Bitcoin Park's Nashville Energy and Mining Conference. Tell us what was going on there and what the mood is among the miners and I guess AI landlords now.
Yeah, no, for sure. Just want to start off saying thanking Rod. They always do like a super good job at Bitcoin Park with curating these kind of like intimate conferences, kind of like the opposite of the more commercial crypto conferences where everybody's there shilling everything, I would say, the people that come to these conferences are kind of like just pure freedom maximalists. Good word, eleutheromania, powerful desire for freedom or liberty. I would consider these people like eleutheromaniacs. But I mean, honestly, synthesizing the conference, I would say like the biggest takeaway was kind of like mining is just evolving into energy infrastructure. Like Bitcoin, not the only output, right? Like it's kind of becoming this anchor workload. And all this AI HPC stuff, like it's not just like this super strong pivot. It's more like they're talking about how mining is uniquely flexible and fast to deploy, AI HPC inflexible, right? And so mining is kind of being like recruited as we're seeing like all this different stuff happen, right? But yeah, I mean, the main thing is like energy. We will always have like an insatiable demand for energy as a society. I'm sure like all of you guys have seen that chart where it's kind of like energy use per person versus GDP per capita, and it's kind of just like,
yeah, there are no poor energy rich nations and no rich energy poor nations, or energy consumption. There's no it's not about having a lot of energy, it's about consuming a lot of electricity.
Yep. Yeah. Energy use. But yeah, I mean, also the nuclear stuff. There was this guy, the president of the American Nuclear Society, I believe his name's Hash, which was kind of funny. They were like talking about how he should have been a Bitcoiner because his name was Hash. But the nuclear stuff, it's insane. Like I always kind of knew nuclear, like I knew a little bit, like, oh yeah, nuclear is awesome. Like it's the best way to improve our energy quickly over time. But really it's like, the only way to generate 3x as much electricity between now and 25 years from now is what he's saying. And they're just constantly talking about this. There are a few like Bitcoin miners that I wasn't even aware of, like Electron. I'd heard of them, didn't realize like how big they were. And then like some other companies, like there's this one Exergy. They like got up on stage and they're like, you know, actually heat is the product, Bitcoin is just the cherry on top. And so they had like they're doing all this stuff with utilizing heat that comes off mining. They had this hot tub that they were, you know, 100% powered by heat from mining.
Spa
But
256. That's what they call it. Spa
yeah,
256. Did anyone get in
nah.
it?
Yes, they were in there drinking beers. Like
Eh.
they were just chilling there. I didn't have my swimsuit, so I couldn't
Yeah.
join.
Well,
But
I think what you're hearing makes a lot of sense, Will, that like Bitcoin mining is now seen as a possible use, maybe a floor use of energy. Some savvy Bitcoin miners, many of them actually have been talking about that for years, that it provides this, but in the context of why they're mining Bitcoin other than just like shutting down their business, right? And in the context of defending the energy use that Bitcoin mining has against the criticism that it's somehow wasteful, they would talk about how it's a base load for the electrical grid and how it can be turned on and off and curtailed at a moment's notice, which is unique. But it does seem now the Bitcoin energy producers are seeing Bitcoin miners as sort of one piece of the puzzle with data centers and other use cases. And many Bitcoin miners are pivoting to doing all or at least some of their energy consumption flow into racks that they lease to GPUs, right? And of course, Galaxy has converted its entire Bitcoin mine into one such.
yeah, no, for sure. I was trying to get some numbers on like, you know, exactly what percent of miners were doing this. It seems like, based on my conversations with people, kind of like 60 to 70% of public miners had at least integrated some sort of strategy. Maybe not like a full pivot, but yeah, I mean, very timely conference, right? Like we just had this winter storm, you know, and hash rate drops. Like this is just such a flexible use case for energy. And I don't know, it's something that people kind of like forget, because you hear people talking about Bitcoin mining as being so wasteful, you know, and like this is just this narrative that has been kind of like, you know, drilled into people's heads over time. Obviously the people that are in Bitcoin know the truth, but yeah, I mean,
Well,
it's just awesome going to this conference, honestly. It was my third time.
Yeah, it's a great one. Real quick, too, I'll just point out, we had a prediction at the end of 2024 that more than half of the 20 then publicly traded Bitcoin miners by market cap would announce a transition or enter a partnership with a hyperscaler, AI, or high-performance compute firm. And we gave ourselves in the 2025 version a checkbox because by our count, 18 of those 20 announced either a full or partial transition to AI HPC business diversification. So almost everyone is doing it. And I think those that are still mining Bitcoin also are probably saying, well, you know, if my AI client isn't, if I don't have one, or if they turn off, then I can divert back into some Bitcoin mining to soak up that energy and create value.
Yeah. One last note I'll say was there was a panel on kind of like various hedging instruments and like derivatives that people in the space were using to kind of like protect themselves financially. And this, you know, made me think about like what I just wrote about with prediction markets. Another kind of like Zach Pokorny was early. But, you know, like I was obviously you have to assume that like the market is sufficiently liquid, which is a huge assumption. But you know, prediction markets as hedging instruments for miners or operators, like especially weather markets, you know, like huge winter storm coming up. Oh, you know, I can hedge my business this way. That was just a side note I thought of when I was talking to people there.
Yeah, weather markets have always been one of the biggest event categories for derivatives, right? And well before sort of like publicly listed prediction markets, producers, agricultural producers have used weather event markets to hedge. So they've existed for a long time, often OTC, you know, with a big financial partner. But I guess you would want to see, it feels like, as an example, even in just Bitcoin mining, there's plenty of demand for this event market volume. It's sort of like we just got to get the liquidity to like, you know, centralize and make it liquid enough for it to be useful.
Sorry, yeah, weather markets are still quite small in Poly Market. It's like 150K average volume.
Yeah, but you can, but keep in mind, you know, some people play this with, you know, commodity derivatives too through like CME, right? Like, you know, corn is going to be up or down a lot depending on the weather, right? I don't think CME and them run any weather markets, but that would be like explicitly, right? One of the nice things about Poly and Kalshi and the emergence of these is that like you can open so many more markets, and sure, that means many of them are like illiquid, but we can start to see what people like actually would want, and like maybe we can consolidate like liquidity around those.
Yeah, I mean, it's a super flexible thing. Like you can make a market around anything.
I like that it's so pure too, you know, like you don't have to be like, oh, well, I'll short like, you know, North, like, I mean, probably, you know, Texas is a very deregulated electricity market. So a miner there, if they're worried about weather, they can short like electricity, you know, or whatever, like they can play directly in electricity, but it'd be nice to just go ahead and play against weather, you know, just keep it as pure as possible. Well, and you got out right before that big storm, and that storm went all the way across like Texas to Maryland to New York. It looks, you know, early data on Bitcoin block times look like they've been slowing materially. So we're seeing hash rate drop off. It's like what did you say before, Zach?
It snowed too much, so my favorite blockchain stopped working.
Well, it is working. It's very resilient, but yeah, block times are slowed on Bitcoin.
It is working.
Yeah, because in fact, it's working exactly as designed. Miners, some of them clearly have turned off and given their electricity back to their grids, which is a thing that they can do at a more granular and immediate rate than any other industry. So it's whether actually additive to grids rather than subtractive, right? They create flexibility for the grid. They'll buy when no one else wants to buy, and they'll give back when everybody else needs it. So we're seeing that a little bit.
It's so wholesome. There are probably like some grandmas out there that are warm in their house because of Bitcoin miners.
There you go. Well, before we get to the end here, let's talk about the week ahead. I'll start what I'm looking at. One, I mentioned watching to see any signs of positivity come out of this by the Senate Ag Committee that tells us that I don't think, to be clear, you're going to see a lot. Where it's not like we're going to very clearly get a signal on like what we know is that big deal breaker, which is the stablecoin yields issue. But watching more the tone than anything, of course, watching for any pitfalls that emerge on that bill, the crypto market structure bill. Also going to be watching very closely how the New England Patriots, start preparing. I know it's only in 2 weeks now, the Super Bowl, but we're getting a Patriots-Seahawks Super Bowl, a redux. No Malcolm Butler, no Richard Sherman this time, but New England Patriots kind of mogged the Denver Broncos a bit in the snow. Yet both of those NFC teams, the Rams and the Seahawks, look probably better than the Patriots. They look really good. I didn't know who to root against for that one.
Yeah, congrats, Patriots. I'm a little salty. I'm a little salty as a Bills fan, just because I feel like we would have won. But you know, I mean, I'm not going to complain. I'm not going to be one of those guys.
What do they say? Like Josh Allen, always the bridesmaid, never the bride. I mean, the poor guy's never made it to the Super Bowl. Is that true?
Yep.
I like forget
he
that
always loses in the AFC Championship to the Chiefs.
to like Pat Mahomes, and that's rough because they're very good. I guess Oh, and they fired the head coach.
I mean, I have my flag behind me.
They had to fire the Bills head coach over this, right?
Yeah.
I mean, it's tough because they have been so good.
I know.
But it's kind of like Bane when he's like, they'll expect one of us in the Rebel Brother. Like Josh Allen's like, one of us has to get cut over this. Like,
yeah.
It ain't gonna be
well,
me.
we'll see. We'll see. Congratulations to Drake May enjoyers.
Zach, what are you looking at this week?
Yeah, I think we like briefly touched on it last week, but a new like ownership coin protocol launched on EVM called Umia. So kind of like the MetaDAO model, but they made a couple tweaks to the auction mechanism and the decision market mechanism. So just waiting to see if there's going to be any news out of there for a token launch, because it'll be interesting to kind of compare the two. We're seeing the design space for ownership tokens and ownership-oriented DAO structures really start to expand. And now we'll have like a few major factories pumping these things out. So it'll be interesting to see what it looks like when it's at full force and we're getting multiple ownership token DAOs launching.
Nice. Yeah, two main things, honestly. First one is this Penguin on the Solana blockchain. I think, beginning of the year, I tweeted about how pump swap DEX volumes were surging. So this is like meme coins. And then we have this penguin going above $150 million market cap. Like the White House posted it. I'm sure everybody's seen this meme. It's like the penguin that leaves his tribe to like pursue the great unknown and walk towards the mountains. But yeah, I mean, we'll see if this can kind of like revive, you know, a new like meme season. I feel like a lot of the meme coin stuff has been driven by just like broader market stuff, like Bitcoin bounces and then, oh, everybody's trading meme coins again. Bitcoin goes down, you know, people stop trading meme coins. It's literally just risk on. So we'll see. I mean, that was pretty sick to see. And then also this kind of AI stuff. There is like some AI bags tokens on Solana that rugged just because like the creators didn't want anything to do with the token. And then, I mean, didn't want anything to do with the token after they had already claimed like hundreds of thousands of dollars of trading fees. But now there's like this Claude bot, which I will say, so this is like kind of an agent you can set up. I was originally sketched out about security just because you're giving it essentially access to a bunch of different things, like, you know, if it has write access to your Gmail or calendar or something like that. And then I was like, oh, wait, all these cracked Silicon Valley tech people are using this. And it's like open source, I believe. So like they probably would have tweeted if there was some crazy, weird security stuff. That's just a side thing. I will say like this, you know, Lucas just put out this big report on X402. I think this whole thing is very, very like X402 coded, you know, like it's very obvious that like the most obvious way for these agents to transact is via stablecoins on blockchain rails. So like I was setting mine up and, you know, a Brave browser API, or like as it does web crawling or certain things on the internet, like surely it's going to be down the line using X402 for stablecoin payments, you know? But yeah, I mean, that's kind of what I'm watching, mainly just like on-chain AI, crypto native meme coin stuff.
All right. I like it. Very interesting. We'll be back next week with, I don't know, even more, hopefully some even more interesting stuff. Although this was a good one, gentlemen, even though it was just us three. Lucas could not join because he is marooned, I guess, in wherever.
This is
in
why
Brooklyn.
you don't live in Brooklyn. I'm in Manhattan. I didn't even lose power for a second. I'm chilling.
All right. Thank you, Will Owens and Zach McCorney, and we will see you guys next week.